let's talk about home prices. So if you're an investor for JWB, this might sound a little bit repetitive, but the reason you're investing is for the long haul. You are not an investor who is buying today and looking to sell tomorrow, right? You're in it for the long haul. Usually a 10-year hold is what I recommend, and a minimum of 5-year hold is what our clients sign up for. So because this is a temporary situation and there's strong underlying metrics and fundamentals for the real estate market here in Jacksonville, we talk a lot about months of inventory, which basically measures how many homes are sold compared to how many homes are on the market. Under 6 months of inventory is a sign that you would expect higher than normal home price appreciation. We've been in the 2s and 3s for a long time now. We haven't even reached 6 since I think 2013. So the underlying supply and demand of the real estate market for housing prices in Jacksonville is strong. I think you can take it even a little bit farther though, right? I do expect us to be in a recession, as I mentioned. And the common thought is that recessions and home prices are related, that if you have a recession, you should expect a real estate crash. Why do you think that is, Pablo?
Because the last recession that we had was an outlier that crashed the real estate market.
Absolutely. Absolutely. That was different than every other recession that we've had. And so what you saw is because real estate and the lending practices and a few other things caused the recession in 2008, real estate took the brunt of it, right? But if you look back over prior recessions, and we've done the research actually, we call this the recession myth, the myth that real estate prices and crashes happen when recessions happen. I think that's a myth. So if you look back to the 4 previous recessions from 1980, there was one, 1981, there was one, 1990, and 2001. For the 4 previous recessions, most people are absolutely shocked to learn that home prices did not go down in average, right? They actually, on average, appreciated at a rate of 4.7%. And I'm quoting Jacksonville data, but even across the country, they appreciated. So that's 4 previous recessions. So I want people to understand that the other thing to keep in mind here is this long-term hold mentality. I even feel more strongly that your long-term home price appreciation is not going to be affected. Another stat that absolutely shocks people when we show them the data is that from 2001 to 2019, your long-term appreciation rate in Jacksonville on average per year has been over 4%. That is very similar to what the long-term appreciation rate has been in Jacksonville since 1991. So a long time we've appreciated at 4.3%. In 2001 to 2019, we had the Great Recession that happened in the middle, where home prices went up before the Great Recession and they went down. And would you believe that we're right there, right above 4%, even in what I have expected to be the most volatile real estate market that I will probably ever see. So again, for those that are JWB clients, for those who are thinking about investing in rental properties, I don't think this is going to have one change to the long-term appreciation rate of your asset. If you invest in Jacksonville, you're going to earn about 4.3% average appreciation year over year, assuming you stay in for a real estate cycle, which is a 10 to 20 year period. So very confident on housing prices. I don't think this is going to have an effect.